So let's speak about the highlights of the week about the economic calendar. This week is especially busy in the forex market. We have a lot of different releases and not only regular events, which are usual things in our economic calendar, but also some events which are rare or even unique, as I may say. We have two such unique events this week. I mean the UK Prime Minister May's speech on Tuesday and Donald Trump's inauguration on Friday. So some big changes await both the United Kingdom and the United States. Let's start our talk with Britain. And we can see that this week we will have a lot of statistical releases from the UK. Inflation data on Tuesday, labor market figures on Wednesday, and retail sales on Friday. In addition, on Tuesday, UK Prime Minister Theresa May will give a major speech on Brexit. And this is an event market players are closely watching. We have seen British pound open this week with a huge gap to the downside, and this is the impact of concerns about Brexit. Last week, when we were talking about the fate of the British pound, I repeated that despite some bright spots in the UK economic data, fears about Brexit are still the main driver for the British pound. And we have seen the confirmation of that. We have seen that although the UK economic figures were mixed last week, manufacturing and industrial production showed good gains in November. The goods trade deficit widened. We see that traders are not really impressed by the economic figures. They want to know about Brexit. We expect some comments about the fate of the UK during the World Economic Forum, which will unfold in Switzerland during the entire week. In addition, May is expected to finally uncover Brexit strategy on Tuesday. It will be just a few days before a crucial Supreme Court ruling on whether Parliament must give its consent to leaving the European Union. And the key thing the markets will be watching is whether Mrs. May wants Britain to remain in the European Union single market or in customs union after Brexit. Last weekend, May hinted that the upcoming exit from the single market, and her words definitely worsened the sentiment about the British pound. All in all, the market is more or less sure that the UK is facing so-called hard Brexit from the European Union, as the Prime Minister Theresa May wants to limit immigration and also has a rather independent stance on the fact that the UK should be out of the jurisdiction of the European Court. So as a result, according to Wall Street Journal, the only uncertainty now is to what extent hard Brexit will be softened by a free trade agreement and some other transitional adjustments between the UK and the European Union. All in all, if we have a look at the domestic political life of the United Kingdom, we can see that there isn't really a big opposition to Brexit anymore. People have gotten used to the idea that Britain will leave the EU, and now the Prime Minister Theresa May has much freedom to negotiate with the European authorities, with the European colleagues, and she'll likely have a rather strict position in negotiation, leading the UK to a really hard Brexit. So, as there are no serious obstacles for Brexit in the UK, we expect further pressure on the British pound as the market sentiment is going to be grim, and Theresa May will likely confirm this hard Brexit scenario. Donald Trump actually said that Brexit is a good thing for the United Kingdom, and of course this also doesn't make any good for the British pound. This is about data from the United Kingdom. We'll be also watching US statistics, US CPI and industrial production on Wednesday. Federal Reserve Chairwoman Janet Yellen will speak on Wednesday and Friday. And also we'll get Philadelphia Fed Manufacturing Index and unemployment claims on Thursday. This is the agenda for the United States. Currently, the market is not very sure about the Federal Reserve's approach to the interest rate hikes, although the head of the central banks, Janet Yellen, said last week that the US economy is doing well, and there were also hawkish comments from the other Federal Reserve members. Still, for now, this is not the main topic of the week, the US rate hikes. The market is more focused on Donald Trump and the various comments he makes via Twitter and in his interviews. And last week there was a big disappointment for the US dollar bulls, as they were hoping that Trump would outline fiscal stimulus measures and other steps which would encourage US economic growth at his news conference on Wednesday. But however, Trump spoke about other things. He didn't mention these policy measures. He wasn't a big talker about the economics, and as a result the US dollar declined. As a result, it has lost some of its territory. So it might be really interesting to see how Janet Yellen's speeches will go. She will deliver 2 speeches during this week, and I think that at least some of her comments must contain something substantial about the US economy and the Federal Reserve's plans for further policy. So I think that it will be important to look at her speeches. Another important event is China's GDP and industrial production statistics on Friday. We know that Chinese economic situation is a concern for the market during the long time now, and fresh data will be a market movers for sure and will affect such risk-sensitive currencies as Australian dollar, New Zealand dollar, and also Canadian dollar. Japanese yen as a refuge currency, as a safe haven, will be also quite sensitive to the news from China. If the data comes below expectations, then it will be a reason for the market players to increase demand for the Japanese yen, while if the data somehow surprises to the upside, then it will be a reason for traders to buy back the US dollar versus Japanese currency. And another event I want to talk about a bit is the release of OPEC monthly oil market report on Wednesday. Although there is a lot of speculation about the organization of petroleum exporting countries, and it will be interesting to know how compliant these nations have been to the recent production cut deal, which was made in November and December of the past year. We are currently seeing oil prices in the area of $55 per barrel for Brent. And I think that during this week, oil prices will be under negative pressure. We won't likely see good news from this OPEC oil market report. And another bearish factor for oil is represented by Donald Trump's rising to power, as he is in favor of relaxing rules on the US oil drilling, and increase of the US supply will be a negative driver for the global oil prices. So Brent oil may come down from levels around $55 a barrel to the area of $53.85, $53 a barrel this week, and this negative impact on oil prices may have a negative impact on currencies such as Canadian dollar and commodity currencies.